Are you concerned that home prices are rising too quickly? We're going to talk about that in this month's housing update. Hi, I'm Nick with the Iannitti Realty Group. Thanks so much for tuning in and Happy New Year. Want to jump in with a quick San Diego housing update, find out what went on right towards the end of last year. But of course, I want to provide you guys a little bit of context on what's going on in the overall market. So without further ado, let's hop in here real quick. Okay, so when we look at basically the recovery, we've seen strong recovery all through 2020. Saw a little dip there. You can see right here, there's a little dip, right at the beginning of November when we had a big event there. But as soon as that event was over, things have started to drastically get back to what we've seen all throughout the pandemic here in the housing market. Strong buyer demand, low inventory, right? However, I've heard a lot of talk lately about forbearances. And what I want you guys to realize when we look at the latest forbearance numbers, forbearances have been decreased dramatically. I've been telling you this throughout the entire pandemic that a lot of people took them out, as a means of kind of hedging if there was going to be a problem, and a significant portion, over 40% of the people who took them out, never even used their forbearance, which in some ways is good news. But when we look at it broken down like this, almost 55% of the people are paid up on their mortgage. Okay, 30% of the people have figured out some type of arrangement with their current mortgage provider. Almost 15% though still have a little bit of work to do. Okay, only about a little less than 2% are actually really in dire straits. And that's not to say that this, 15% or so of people can't work things out. They still can, but it's not this huge wave of forbearance and what we thought and what we saw back in the crash in 2008. However, real quick, I just want to take a time out. If you actually do need a forbearance, I wanted to put up the steps here that you need to take. Okay, just realize that a forbearance is not automatic. You have to request it. You have to reach out to your mortgage provider. If you need help with this, contact me. I'm more than happy to help you. Okay, but back to what I was saying, and even Lawrence Young, I love this guy, chief economist over at NAR, National Association of Realtors. Look, if there's any foreclosures we have that start to hit the market due to the pandemic, we have such limited inventory that those are going to be absorbed quickly by the buyer demand that we have right now with such low rates. So it's not going to lead to some big price decline or some type of haircut on the market. Probably not going to happen. Okay. But as I said, our price is going up too fast. We keep seeing this appreciation going up and up. And what I want you guys to realize is, even Craig Lazara here, managing director of the S&P Dow Jones Industries, yes, they've noticed that, we've seen some significant gains in the housing market, over 7%. We've seen that from a lot of other people, Zillow, Truman, Illman, all basically giving their projections. That's right in line. But however, when we look at this, kind of historically, which I like to do, since 1991, we've seen about 3.8% appreciation. Right now, since 2012, we're at about 6.1% appreciation. So about a third, right? What I want you to realize is if we looked at that historic appreciation, that 3.8%, all the way back from 2000 all the way to today, this is kind of what it would look like, okay? And then we need to add in what's actually happened. So when we look at what's actually happened here, you can see that there was a reduction in 2008, 2009 through the crash. And then as we've rebounded right now until we got to this year, yes, we are a little above the historic average. But when you look at that green curve compared to that orange curve, it's not severely out of whack, right? And still it comes down to our market indicators of limited inventory and very low rates. Of course, just like this, right? They're kind of inversely related. As we've seen inventory dropping since we had the glutton of inventory right around 2010 or so, and since then, new home starts have just not kept up with our population growth, right? Coupled with low rates, and that's given us the market that we're in right now. So there really is no comparison to what happened in 2008. Things are completely different now. People are taking out 30-year fixed mortgages, right? We're not looking at adjustable rate mortgages. I've told you in previous videos that more than 40% of the homes in the United States right now are owned free and clear with no mortgage. When we talk about mortgage, people who have mortgages on their home, over 60% of them have more than 50% equity in their home. This is nothing like what we saw in 2008. It is completely different. If you think we're headed for some big bubble, something's going to burst, we're going to have all these foreclosures and everything else with unemployment, that's just not what the data is showing us. Things are not playing out that way. So just know that, right? You're also going to start to see this, especially in lots of things, our mortgage debt, we have so much mortgage debt, we have so much, mortgages out there. Yeah, that's true. Obviously as the population grows and more houses are built, we're going to have more and more mortgage debt. Okay. What I think people really want to look at though, obviously is that, yes, it's a huge component of household debt, right? So we need to look at that. We need to look at it again, back to historically, what did that chunk of household, how much was that costing you a month, as far as your overall, what we call your debt to income ratio, right? And I think the best way to look at it is something like this. And this is back to why we see such strong demand right now, because rates are so incredibly cheap. We talk about the affordability index. I did another video on, how can affordability be going up while home prices are going up? Well, this is how, right? When we look at the rates, when we look at what it's actually costing people, even though home prices are rising today, it's still costing them far less from a monthly budget standpoint than it did back towards the beginning or the uptick of the previous crash. So that's important to remember. Okay, you need to kind of keep it in perspective, so to speak. Okay, looking ahead, I've decided I'm going to do a whole separate video on my projection for 2021. There's just too much stuff to unpack with the pandemic and everything else. But keep in mind, the pandemic is kind of the linchpin of the whole thing, depending on how quickly these vaccines can get into the hands of people that need them, and what it's going to look like as far as not just here in California with reopening back up for business, but also going forward, how are people going to continue to work? Are we going to see a shift in the workforce here in the United States and around the world, quite honestly, where more and more people work from home permanently? Right, that will change how people interview for jobs in other areas and where they want to live and what they're living in. Right, they're going to have housing that's going to accommodate office space or things like that. We've already started to see those shifts happening this year. Okay, we do know that mortgage rates are projected to stay low all through next year, even a little bit longer. So that's good news for buyers. Right, remember that affordability aspect. It's still going to be very affordable for you to buy. So definitely good news for buyers. Of course, with the limited inventory, great news for sellers. If you have ever thought about downsizing your home, if you're going to sell your home now and move to something smaller, this is like, man, 2021, really, that should be part of you should give that a really hard look. It's an absolute excellent time for you to sell your home at a high price and also be able to purchase a new home with a very low rate. So very attractive a situation there. Everyone is expecting home sales to continue in 2021 and increasing. Almost every single price forecast you look at, I don't care how whether it's a 12-month forecast or a year-over-year forecast or just a general bracketed year forecast, all of them are calling for a price increase. So I think, again, with the inventory, it's taken us so long to get into the situation that we're in. We're not going to see that changing quickly. Okay, and we've already seen it. Just myself, I had 5 escrows here in the month of December. The winter so far, things have just been going gangbusters. I have a closing schedule next week, another one the week after that. For January, already getting things going. So the winter has definitely been robust. The buyers really have not taken a break out there. And again, back to the limited inventory, but also the fact that they're still trying to capitalize on these rates, trying to get in some particular areas. So what does that mean for us here in San Diego? When we look at what happened in December, remember, these numbers are for the entire county. They are all median numbers, the true middle. They are for all different housing types, single family, condo, detached, everything, all different price points, all put together. If you want to know specifically what's happening in your neighborhood or your price point or your housing type, let me know. I'll be more than happy to have that conversation. But basically, we saw, sales price now, minimum median sales price is $650. That's up 13% year over year from previous December 2019. Active market time down to 13 days. So that's a 48% reduction. That means things are selling twice as fast as they did a year ago. Price per square foot is up 13%. This I thought was super significant. This is the first time I have seen county-wide monthly inventory below 1 month. That is huge, right? It's down 52% year over year. So definitely keep that in mind. Remember where this line sits, everything above the line are lagging indicators. Now looking in the leading indicators, we've had less active listings coming on, basically about half of the listings we did year over year, but still about 90 a day. New listings were 2,300. That was up 8%. That's good. Pending listings, though, are up 27%, right? So that's really what we want to look at. We want to look at how many listings are coming on and new listings, but how quickly they're being absorbed by the market. Those pending listings are telling us where the market is going. And we're seeing sales still accelerating, and our overall total sales are also up by 20%. So that's it in a nutshell, right? Still not enough inventory out there with incredibly attractive rates out there. So same old kind of story. So basically, I just want you guys to have an idea of what's going to be happening next year. Again, I can't predict the future, but it looks like we're going to have a little bit more status quo. Inventory will not get better. Rates are going to stay low, which is going to lead to basically higher appreciation and very much a similar market as we've seen all this year. Again, if you have questions about, what your home is worth, is this a good time for you to sell or buy? What's happening in your neighborhood? I'm more than happy to have that conversation. Just reach out, let's connect, and that's it. Thanks so much for tuning in. Again, Happy New Year, and remember, who you choose to negotiate for you absolutely matters.